Good afternoon, traders. Today's Sunday, September 21st, the last day of summer up here in the cold Great White North, but a good day to educate you on what everybody likes to talk about these days, which is the opening trading range. Okay, trading the opening range breakout patterns. You want to have a predator mindset on the Nasdaq 100 or the Nasdaq or the US 500 or the ES or the SPX or the SPY, whatever you want to call it. Okay, we're looking at the US 500 here. All right. Now, essentially, the market itself is a trap for fools. Okay, every day billions change hands, not because traders are smart, but because they're predictable. Okay, today I'm going to show you how to use the opening range breakout to stop being the prey and to start hunting like a predator. In other words, to stop being afraid. So, obviously, the opening range happens between 0900 in the morning and 10 o'clock. Okay, so it's 9:30 in the morning essentially is when we get the actual opening of the market. But we meet in the NASDAQ Game Changers room ahead of time to decipher where price has gone and where it's likely to go. This was last Friday, the 19th of September 2025, where you can see I marked out in blue the top of the opening range of the S&P and the bottom. Okay. So obviously when the market opens, chaos hits, orders flood in, spreads widen, volatility spikes. And this is where most traders lose. They chase the first move, get whipsawed, and the market takes their stop. But predators, they don't chase. We wait. Okay, we let the market expose itself. Okay? And that first 15 minutes, that's your hunting ground. It defines the opening range, high, low, and the battleground in between. And as you can see from Friday, 6639 was the low, 6649 was the high on the US 500. Now, in knowing that the market is a trap for fools, it's always been that. Okay, it's always been that. Any particular market, it doesn't matter whether you trade penny stocks, it doesn't matter whether you trade small caps, it doesn't matter whether you trade mid caps or the most liquid markets in the world. The markets are designed in the short term to separate you from your money. Okay, so here's the secret: the market doesn't move to reward buyers and sellers; it moves to hurt them. Okay, so in other words, you look at the NASDAQ with its incredible volatility as ways to make quick profits, to start having a really great life, but you don't look at it as it is a tool because it's so volatile to separate you from your money very quickly. That's the difference between amateurs and pros. Okay. Now, we basically know that the dip buyers who think they're smart, the breakout sellers who think they're ahead of the curve, they all get trapped. Okay. Now, you can see that here. You can see it clearly on Friday where the market, opened this particular candle right here. Right here was from top to bottom the opening range. You can see the poke above, move back, the reversal, the reverse through, the drive back, then another low. And then this is where we were waiting, but I'll get to that in a minute. But you can see that it was nothing more than a way to trap traders and take their stops. So that's what I want you to get out of Friday. The idea that you can just sort of do one-to-one risk to reward to is a bit of a myth. Do you see anywhere where you could have placed your stop there that it wouldn't have been taken out? No. If you placed it, on a 1 minute chart, just be it below, you get taken out. If you place it on the 5 minute candle, you get taken out. If you place it on the 15-minute candle, you get taken out. Same thing with the other direction. Do you really get your one-to-one risk to reward? Not really. Moves down a little bit, but then quickly reverses. And if you were there to see it, This particular move was so fast and the spike was so great that traders just got ripped to pieces super quick. And it happened 2 or 3 times on that Friday. Okay. If you look at the NASDAQ, you notice how it loves to push above the range, suck in breakout buyers, and slam right back into the box. Same on the downside. These aren't accidents. They're designed by liquidity. They're designed liquidity traps, okay? And essentially what that means is you become the liquidity, okay? So how do we trade it? That's the biggie, like everybody else, like every other video out there that shows you, wait for a proper close above or below the particular breakout range. That's not how we do it. We think 2 steps ahead, all right? So we don't react to what's happening. We anticipate where the market wants to punish the herd. Okay? If you trade like everybody else, you're going to get the same results as everybody else. If the ORB were a super great strategy, and don't get me wrong, it is, if traded intelligently and the way we teach. So these are the key areas where the market is most likely to turn and trap traders to fuel the next move away from them, generally. As predators, we don't trade every fake breakout. We grade the setups. Okay. When grading means you can use ABCD, you can use 1, 2, 3, you can use XYZ, whatever particular acronym you want, but make sure you have a good setup and a medium setup and a weak setup. Okay. And you have to understand each of those before you enter into the trade, because you're using a larger position on your good setups. You're using a very small position, or you're not entering at all on your weak setups. All right. So when you use a trade grading system, let's say the A setups, there's a clear trap, a clean rejection at the key area and volume confirming. That's where you size up. Your B setups are good structure, but maybe less volume or less conviction. Take it small. And your C setups are weak signals, overlapping chop, so you stand down. There was our A setup of the day. As you can see right here, down where that little white arrow is. Okay, it wasn't on the breakout, and it wasn't on the lower breakout. It was waiting for basic supply and demand to start working against the sellers, taking into account that the market is in a bull market, as it had been all week long. Okay. So we just simply waited for the optimal area, which was the exact low of the day, although we didn't know it at the time. That's where we entered. That's what we had marked out ahead of time, long before price got here. That's where my box was. Not up here in the obvious ORB setup, but down here was my key box. Now we do that every day for the NASDAQ and for the S&P. The NASDAQ, interestingly enough, went straight up from where our box was too. So grading your setups is the foundation of dynamic risk management. And that is how you can run a system that only wins 40% of the time and still walk away profitable, because you win when you win. You hit hard, okay? And that's the real secret. It's called dynamic risk management, okay? So it's really clear what happened here on Friday. Not all days are like that. There are days that close above and they rip higher. Do you know how many days that those are per month? They are about 3, okay, where you can count on the fact that you can use really high leverage and really large position size, and the market is going to continue to grind higher. Okay. Now that happens 3 times a month, and you have to have a pretty darn good idea which days those are. Okay. The rest of the time, you want to be usually grading, BC grade trades. All right. So when you tie it all together, the ORB isn't about range. It's about psychology, behavior psychology, which is exactly what we're teaching here. Understanding that the markets exist to transfer wealth from the undisciplined and impulsive to the prepared and patient. So at the NASDAQ Game Changers, which is my Telegram channel, This is what we do. We decipher not just what we see, but where the traps are likely to occur before they happen. So next time you're at the open, don't chase the move. Box the range, grade your setup, wait for the trap, and when the herd gets slaughtered, step in. That's the predator's way. All right? So that is basically it, and it's a very brief scenario here. I'm not going to go into a lot of detail about where we look for and how we know when this particular move, when it breaks above and holds, but there is ways to tell that too. Okay? Or you can chase what everybody else chases. So join us. I would love to see you in the NASDAQ Game Changers room on Telegram channel, where we open at 0900 every single morning. I wish you a fantastic rest of the weekend.